Today, I want to dive into a really important topic, looking at some of the worst investments to make in 2025. Now, overall, I've been in the financial space for about 20 years, and there are a ton of ways to make money, even looking online, looking at social media. There are a lot of scams out there, and there are a ton of traps that people fall for. And if you're not careful, I have seen individuals lose their entire life savings just really chasing the wrong thing. So if you're getting started in investing or you want to protect exactly what you build, this is the video that helps you identify those red flags and really chasing a lot of those get rich quick schemes that can absolutely devastate your financial situation. So stick around to the end. I want to run through all of these. And number one, a lot of smart investors even fall for. So let's go ahead and look into this and run down the checklist. Now, the first one we look at is luxury or collectible items. Now, we have seen this, and I personally know individuals on the personal side, also the professional side. When you start looking at collections, when you start looking at Pokemon cards, I know a lot of people that wanted to get rich scalping Pokemon cards. Some of them made some money. Some of them lost their fortune. Some of them, it absolutely ended catastrophic. We're talking divorce. We're talking bankruptcy. We're talking a lot of different things. And for a majority of people, they say roughly 99%, luxury and collectibles are just money pits. They're not investments. And for a lot of people that were even trading Pokemon cards over the last 5 years, most of the cards that they bought at a very high value have lost an incredible amount of value over an extended amount of time. Now, this can also be true when it comes to luxury cars. I know a few individuals that have had luxury cars. Unfortunately, 100% of the individuals that I've seen buying these as kind of a collectible have lost money. When you start totaling up, maintenance, insurance, storage, depreciation, there are so many things that can eat away your profits. And you also have to take care of them. You have to maintain them. You have to store them. Everything comes with collectibles. Physically having the collectibles, whether it's comic books, I collect Magic the Gathering cards. But like I said, Pokemon cards, there are so many collectible things that people think are going to be worth a lot of money, and they put a lot of money into. But of course, then when they have to liquidate it or when you have to sell that asset, unfortunately, you have to find a buyer. Now, also be very wary if you're in the collectible market space, because we have seen a crazy amount of fraud through eBay and any of the social media platforms, including Facebook, that sell cards, that sell collectibles in the marketplace. It is kind of crazy. Now, like I said, I buy them from a very reputable source when it comes to my collectibles, and I do know that I have to sell them. But overall, do I feel like they're going to increase in value and it's going to go parabolic? Absolutely not. The collectible market is going to be there forever for people who want to really get into some of the games. But as you can see, and again, kind of thinking over the last 30 years, a lot of games that I played, even a lot of trading card games, have went to absolutely zero. There's no value at all. So people looking at collectibles, you have to know exactly what you're getting into. Now, one that I've seen a lot of people fall into, it is the penny stocks and the get rich quick trades. We talk about this because all of the individuals in the younger generation that want to be day traders, looking at penny stocks, and I know they're not as prevalent right now, just for the simple fact that you can trade pretty much everything. You can do it on leverage. You can do it on 3X. You have to be very, very careful when it comes to some of these, especially, again, penny stocks going way back. They are manipulated. They're unregulated. They are companies. Most of them go to zero. Now, we see this a lot of times also with cryptocurrencies. We are starting to see a lot of the pump and dump when it comes to social media, when it comes to getting investors really hyped about a new token or coin, meme coin. They'll go ahead, they'll pump up the price, and then they will go ahead and dump it. And it's kind of who is left leaving or really holding the bag at that point. You have to focus and really hone in on those companies that have a proven track record, not looking at companies that could and might not be around in a year or two, maybe even 5, and putting a lot of money into there. That's the reason why when we start looking at very sound investments, we look at our ETFs, we look at diversification, we look at baskets or buckets of stocks in the entirety. If you start doing kind of the speculative investing, you need to do it on a very, very small scale. I'm talking if you're putting in your portfolio, 1-2% would probably be about it when it comes to the super high volatility with some of these companies. And of course, the chance that these companies could be bankrupt. Now, being in the financial space, I have seen this a lot, and it is timeshares. Now, these are one of the biggest traps that I've seen that are sold as investments. I've seen some individuals that use them on a regular basis and they actually do incredibly well. But I know probably 10 times more people that have been stuck in timeshares. And even in the case where an individual has passed away, let's say it was a parent, and the timeshare is given to the kids, and the kids have horrible, horrible times trying to get rid of these timeshares. Now, of course, the sales pitch sounds incredible. Own a piece of vacation paradise, have a lot of different places you can go. And trust me, if they're utilized properly, they can be kind of a value, knowing that you're going to go on vacation. But if anything changes or you don't use it, you still have to pay the price. Now, what I've seen also with this is a lot of people that are buying these expensive maintenance fees. This is a point where I've seen individuals come in, they're getting unsecured loans, they're doing a lot of borrowing to cover the maintenance fees of a timeshare when sometimes they haven't used this timeshare in years or even decades that they've been paying these maintenance fees. Some of them have a little flexibility. Some of them have almost zero resale value, where if you want to get rid of it, chances are you can't get out of the contract, or you can actually go and try to just unload this product onto someone else. Like I said, there's kind of a niche individuals, probably one or two that I've known through crazy enough 20 years that have used timeshares and have used them on a regular basis. For a majority of people, it just seems like it's a really burden. If you want to go on vacation nowadays, guys, between, VRBO, Airbnb, you can go where you want, super flexible. And of course, it really beats not knowing what you're going to pay for the timeshares in the entirety. And who knows exactly how long you're going to be paying for them. Now, this is another one that I really steer investors away from, looking at the overhyped AI stocks. Now, I was in the AI summit today with Tony Robbins, and it was very interesting to see. But there are a lot of tech startups that we're seeing right now, especially when it comes to quantum computing, that the AI companies have no profit, or some of these quantum computing companies have no profit. Now, when we start looking at like a D-Wave is actually showing practical applications with actually within the commercial space. But then you look at Rigotti, you look at, QCOM, you look at a couple of these other companies, and they actually have no profit. They're almost testing in theory, which I know there's a time and a place for that. But as an investor, artificial intelligence, super exciting for a majority of people, but not every company is going to be the next NVIDIA. Not everyone is going to be the next Apple. Right now, investors are chasing and really driving up the market prices and the evaluations of these companies with anything that is really dedicated or focused on or research and developing into AI. Even if the company doesn't have a working profit, they are still looking at a forward price ratio that is super huge. If the business doesn't have any profit, doesn't mean there's a path, and really a clear path going from a path to revenue. It could just be purely in hype. Again, when you start thinking about like cryptocurrency in the same kind of vein with kind of the pump and dump, where if you see some of these companies that are like 30, 40, 60, 80 P&E ratio, you have to be careful. You don't want to confuse the innovation that they're developing and really building these new computers on with the investment opportunity that some of these do really offer. And even then, if you're looking to get into something like quantum computing, doing something like and I believe it's the DTUM is the ETF that I'm in, or it might be the QTUM. Drawing a blank on the name right now, but it is actually an entire segment, an entire section of that quantum computing. So again, I'm not going in there. I'm not picking out one or two companies. I am betting on the entire sector as a whole. And of course, when we start thinking and staying in that investment vein, high fee annuities. I have seen a lot of people that get burned. Annuities can sound super safe. Now, it depends on the annuity you're really purchasing, what company you're buying for, what the terms are. And you have to be careful with annuities or structured products, because for a lot of them, they come with a very, very, very high penalty. We are talking some of these contain like a 10 to 15% surrender fee, meaning that if you put $100,000 in there, you don't carry that annuity to the full term. You have to pay a large penalty on the annuity. And of course, when you start looking at annuities, guaranteed income, peace of mind, a lot of times they're hidden fees and they have complex rules to owning some of the annuities. You could be locked in for years. You could pay huge surrender penalties if you do an early withdrawal, and really have and lose a lot of the flexibility that you get with some of these. So really good rule of thumb, if the person that is selling you annuities cannot explain how they work within the first 2 minutes, stay away from annuities. Now, of course, you have to take that with a grain of salt, guys, because when it comes to some annuities, it'll make sense for some people. And I know they've actually started having a plan of taking like a 401k, and a portion of a 401k is actually going to go into somewhat of an annuity, because what we're seeing right now is with a lot of the 401ks is you get to retirement, you take your 401k, you cash it out to an IRA, giving individuals a crazy amount of money out of a 401k. If you've saved $500,000, $1 million, $2 million, giving a lot of people access to that money, they have a tendency to spend a lot more than they need to. And what we're seeing right now is they are running out of money during retirement, which can be absolutely detrimental when it comes to long-term care, when it comes to assisted living, when it comes to a lot of bills that come later in life with health concerns. Again, a lot of people are getting burned out because they're burning through all of the money that they spent the last 40 years accumulating because they're giving them access to it. Now, again, if you look at something like an annuity structure, you can put X amount of dollars in there. They will give you a paycheck every single month, meaning the money is locked up. Yes, it is locked up in annuity, but you are getting a monthly paycheck out of there, which does work incredibly well. Now, of course, this is something that I stay away from, looking at junk bonds or high yield bonds from weaker companies. When interest rate rises, everyone looks for higher yields. When the interest rates go down, a lot of money shifts places. When we look at right now with rates going down, we're seeing, high yield savings account rates going down. We are seeing CD rates going down. When the companies start really being able to borrow cheaper money, they're going to offer lower terms or lower rates on all of the products and services. So it essentially rewards anyone who wants to buy anything, but it penalizes anyone who wants to save money in those CDs, in those high yield savings accounts. Even since the last 2 rate reductions, my rate within M1 Finance has actually tiered down in that high yield savings account. I believe it's around 3.3 right now, which is definitely lower than the 4.5 that they were paying or the 4.6 they had. So we're going to have to be careful and see exactly where it is. Now, junk bonds, very similar to penny stocks. They promise a very big payout, but these are companies that can't get funding anywhere else. If the economy slows or rates go higher, these bonds have a very high default rate. Now, we can also see this, a lot of places do like peer-to-peer lending. You have to do your own research. Even thinking of some companies like when we look at Masterworks, getting involved in kind of that fine art, there is an extended amount of time that is in there. A lot of people don't understand how it's locked up for a certain amount of time. You only get paid if they sell the painting. If you want out, there's a secondary market. You have to know some of these investments and you have to understand exactly how they work. Not chasing yield. When we start looking at yield, and it's kind of crazy right now because it's almost like the penny stocks, the high yield bonds, the junk bonds, all of this stuff is slowly going away and being replaced by like covered call strategies that we're seeing with ETFs. And it's kind of crazy when we look at YieldMax and a lot of companies like that, where they offer a super, super high yield or super high dividend yield, making sure the companies have stability, making sure the long-term effect, we don't know. A lot of these covered call strategies that they've been doing have appeared over about the last 2 or 3 years. So we got to see exactly what it's going to look like in probably in the next 3 to 5 years and see exactly where we are looking at those investments. Now, this is one that happened recently, guys. Overseas real estate are too good to be true. So quick story here. I had an individual that was looking to purchase property in Mexico. They had a broker that was in Mexico, went through, did a wire transfer, international, moved the money down there. Come to find out, it was an entire spoof. The actual property was owned by another individual. And if you're unfamiliar, and I wasn't, we did a crazy amount of research, but over there, it might not be titled. It might not have ownership. There might not be an address. It might just be a piece of property. It's very, very hard. When you start looking at different countries, they fall under different laws, different currencies, often no legal protection. Now, he wired around $30,000 down there to buy a piece of property. Unfortunately, that money is gone in the entirety. And again, we're kind of calling it a scam. There's no underwriting of the ownership rights, what it was for the land. The property was never, I mean, the property's there physically. He went down and seen the property physically, but it's very hard if you can't visit it, if you can't inspect it, if there's not legal documentation behind it. You have to be careful before you buy it. Now, this is another point because my wife and I were actually looking and buying property over in Italy and Sicily, where my wife's parents are from. We were talking about it and looking at some of the prices and the legalities of everything you have to go through. If it's too good to be true, but if you check the news, guys, they are giving houses away, and now a bunch of different countries for $1. So you can get a place overseas, $1. Now, again, we went through all the rules. We went through all the regulations, all the caveats to this. If you buy property overseas, that is literally $1. Definitely sounds too good to be true. But the stipulation is within the next 24 months or the next 2 years, you have to put X amount of dollars into renovations or improvements of the structure that you're buying for $1. Now, of course, a lot of these places are not in good areas. Again, kind of really doing my research. Want to go over there, want to see some of these in person and see what it looks like, because some of the population over there, some of the smaller towns that are in Italy, they're looking at, 50, 60, 70 years old in an average age. Next 10 or 20 years, those towns will not even exist because they do not have the population base to support it. So it's going to be interesting to see what exactly is happening. Now, this is a scam in the next one that I was affected by. I played a game, Alluvium, speculative cryptocurrencies, and meme coins. So we were playing Alluvium. Cryptocurrency can really create millionaires. It can also, from my experience, have seen as many heartbreaks. We have seen a crazy amount of scams. We have seen a lot of things, and that's exactly what happened with Alluvium. I had actually played the game for a significant amount of time. We beta tested it, had the currency over there. Unfortunately, there were hundreds, if not thousands, of wallets that were compromised. Don't know exactly the inside or outs of exactly how it happened, but a lot of the coins, all of the wallets, MetaMask and a couple other ones were cloned with cryptocurrency. And again, it was a gaming cryptocurrency over there to support it. So, I mean, you got to be careful of meme coins. When you start looking at Bitcoin, when you look at Ethereum, when you look at, Solana, when you start looking at some of the larger cap cryptocurrencies, I feel like they have a lot more validity. They have a lot more tracking. When we start looking at meme coins, when we start looking at obscure tokens, new AI tokens are popping up everywhere. And I actually had an individual that was investing in a ton of different coins, coins that I had never even heard of, coins that some of them we could no longer even find. And I know Coinbase has actually started delisting a lot of the coins because of this kind of speculative nature of the cryptocurrency. So they've been taking some, and there's as much as they add in there, they've been removing a lot of them. When I start thinking of the smaller coins, a lot of it is more similar to gambling. That is how I kind of explain it to a lot of individuals. When you start looking at some of the meme coins, when you start looking at people that want exposure to cryptocurrency, but they want a very, very small percentage of their portfolio in actual legitimate coins like Bitcoin and Ethereum, you have to be super careful, guys. You can't be chasing what you've seen. And I just had an individual that was talking about some of these meme coins, some of these really small coins. And I asked him, where did you hear about this? And of course, the number one word where the investing advice came from, it was from TikTok. Some random person. I was like, have you followed them? Have you talked to them? Do you have any relationship with them? No, it was literally one random person, of course, that showed up on TikTok talking about some meme coins because he watched the video and did a little bit of research. All of a sudden, TikTok started feeding him a bunch of additional videos about the same meme coin. So he invested, unfortunately, lost all the money in that case again, investing in meme coins. The meme coins essentially did the same thing with the pump and dump, went up to about a fraction of a fraction of a fraction of a penny from where he bought it. And then they just dumped it all out. It lasted about 1 day. And then the meme coin essentially lost 99.99% of the value, including all of the money that he put in there. So you have to be very careful, guys. Like I said, when it comes to investing, not only the platforms that you're investing in, utilization of like a Robinhood or Vanguard, Schwab, a lot of these legitimate platforms, you have to stay in. I've seen a lot of platforms that are illegitimate or that are not even legitimate platforms. I had an individual that was investing in Coinbase, and what the fraudsters had done is they had cloned, and it looked very similar to Coinbase. However, there was no associated in with Coinbase. So when you logged in, username and password, it looked like Coinbase. It was just kind of a cloned website. When we actually contacted Coinbase, he had no account with them, no money with them, no funds, no whatever. Soon as you call the fraudsters out, all of the money was gone. Everything was gone. Even the website itself was shut down in its entirety, which is kind of crazy when it comes to some of these scams. Now, of course, before we start investing, I have to hit this one: investing when you have debt. Every single video, probably 90% of them, I go through here and I talk about investing while you have debt. This is a big, big part. When I do financial education, when I do financial counseling with individuals, I see people that are putting away a lot of money or saving a lot of money, putting it into savings accounts, putting it into investment accounts when they're carrying $5, $10, $15, $20,000 in credit card debt. Think about it for a minute, guys, and really take a step back. Think about it mathematically. If you're in the S&P 500 and even this year doing incredibly well, making your 17%, boom, the market is going up. You're paying 26%, and even some of these were 28, 30% on a card. Guys, you have to eliminate the debt. This is really the first step. That is the reason why, regardless of the financial gurus, if you're watching the Money Guy show, if you're looking at Dave Ramsey, if you're talking about Ramit, all of them really stress, including myself, you have to eliminate the high interest debt before you actually get started investing. The worst investment you can take is actually investing before you're ready, because you're carrying that high interest debt. If you're carrying it, credit cards, personal loan, and again, we're talking about probably 8 to 10% or higher, the rates will usually be higher than your actual returns. Now, think about this for a minute also. Rewind to 2022. You're putting money, you have debt, you're putting money in the market, you're dollar cost averaging, doing everything you need. Not only are you carrying debt at that 20+%, then the market drops 5%. Then it goes down 10. Then you're down 15 and 20. Now you're north of 20%. So not only are you investing at a negative 20% return, you're still paying 20+% on the credit card debt, which is kind of crazy when you think it is going to beat out. And of course, with the credit cards, it is a guaranteed rate that they are going to charge you. You have to eliminate that. And then it also comes back to the emergency fund, guys. You have to make sure you build the emergency fund. This is going to keep you from debt. It really, really is the most important. If you have no emergency fund and something happens, all of a sudden you're forced to sell your investments. Could be the wrong time, could be a down market, could even mean pulling money out of IRA accounts, could be pulling money out of 401ks that have a really big penalty. You want to make sure the emergency fund is established, is fully funded before you invest. This is the foundation. When it comes to really building your foundation, the financial foundation of your life, it starts with this. And again, that is the reason why you come up and you have a plan when it comes to the emergency fund. And the final one I'm going to leave you with, guys, which is the big one. If it's too good to be true, with guaranteed returns, 99% of the time, it is completely true. If anyone is saying that they're giving you guaranteed returns, especially guaranteed high returns, we're talking 8, 10, 12% without risk, is almost always a scam 99% of the time, from a lot of crypto staking platforms that are offering you 100% return on your staked cryptocurrency. I have seen it. I have lived through it. I've seen individuals, again, really lose a ton of money, whether it's going into real estate scams that we see, Ponzi scams that we see. They're designed to trick people that don't understand exactly what they're investing in. They're chasing that certainty with the return. And when you start looking at this, especially when it comes, it requires, and it 100% guaranteed, it is 100% risk-free, is lying when it comes to investing. There is no guarantee. If you're putting money into a business, if you're putting money really anywhere in the market, it always comes with a risk. Even if you're looking at, let's say, some places where, depending on even financial institutions, we've seen some instability. We've seen it in California. We've seen it in New York, where you might have money invested with a financial institution. All of a sudden, it goes belly up. You have to wait through the FDIC or the NCUA to get a lot of those funds back. Might take months, might even take years, depending on the situation. Now, again, you got to be careful. This is the reason why I do not keep a lot of money in financial institutions. Even though I work at one, I know a lot of the stability is there with a majority of them. Thinking of your JP Morgan, your Wells Fargo, your Chase Bank, they've done some shady things in the past and continue to do some things, especially Wells Fargo. When it comes to the future, who knows what's going to happen? And we're also starting to see a lot of the acquisition or the buyouts within companies. Now, we've started seeing it. I know even locally here, Comerica just got bought out from Fifth Third, and that is a massive merger for some of those really mid-sized banks within the United States. We're starting to see it, and I believe in the last probably 5 years, that's about the 6th or 7th merger that we've seen here. So it's almost going back to the monopoly kind of logic, or thinking where you're going to have 3 to 4 companies that kind of run everything in its entirety. So it's kind of crazy. But again, if you're looking at anything that is returns of 7, 8, 10, 12%, chances are it is almost always going to be a scam. And I see so many people that chase these all the time. They put their money into something that is either a good return, that is a super, super high risk, that they get completely burned. They lose all of their money in the entirety. Or I see the flip side of it where people are so ultra conservative, they're keeping it liquid in a savings account, 20, 30, 50, $100,000 at a 0.05, just sitting there, losing money every single month, every single year to inflation, and just burning out the money. Guys, you got to have a happy medium, got to know exactly what your plan is when it comes to investing. So guys, there you have it. That is the rundown. That is the list when it comes to the 10 worst investments really in 2025. Good investments and really having the sound advice, not chasing all of those hot trends, not looking at the cryptocurrency. It is about consistency, patience, and making and really avoiding those really big mistakes. You have to stay away from them because it can be absolutely detrimental. And it's funny because I share with you guys everything that I do financially, like it, the pros or cons. A lot of people will watch a ton of things on how to make money. No one wants to know how to cut and how to save and how to eliminate your spending. It's kind of interesting to see. But even in my portfolio, a lot of people comment, your portfolio is super boring. And you know what? Consistency, patience, boring portfolio. I will take it absolutely when I start looking at the last few years and I'm up double digit year after year after year with the portfolio. Again, I know it's super basic. I know it's looking at 3, 4, 5 ETFs, but that is the way I want to do my investing. And as of right now, we are well north of $1 million invested, and it continues to grow at an exponential rate. A lot of people are also commenting about tech. Now that the tech bubble has bursted, which I don't know where you're hearing this news, because of course the tech will go up and down. Even if the tech pulls back 5, 10%, that would be kind of normal to put more of that P&E ratio in line and really with the earnings. But overall, guys, the consistency in investing over an extended amount of time is going to beat out the ups in the market, ups and downs in the markets. Always. I talk about this a lot. When it comes to really building it out, it is about the accumulation of assets over an extended amount of time. Even for me, we are putting money into the market every single week. We are also putting money in the market every 2 weeks through my 401k plan. So we have brokerage accounts, we have HSA accounts, we have 401k accounts, we have IRA accounts. I know I might be oversaving some, but honestly, when you start doing it, it's almost contagious to see how much money you can put on a regular basis and how fast we can build up that portfolio. So, right, guys, so if you found it helpful, definitely hit that like button, share it with anyone who needs or has fallen for any of these scams, any of these fraud things that we've talked about, and also some of these investments that are going to lose money in 2025 or even 2026. Subscribe to the channel because we do videos every single day, guys. Drop a comment down below if you have ever fallen to any of these, because like I said, me as a financial counselor, 20 plus years in the financial industry, and every one of these, all 10 of these worst investments, I have seen people fall for, people get involved with when it comes to crypto, when it comes to investing, when it comes to looking at any of the collectibles, have lost an incredible amount of money, and I don't want it to be you. So again, guys, that's going to do it for today's live stream. Thank you guys for joining me, and always Thank you guys for watching.